How's it going, everyone? This video is going to be about broadening formations. We're first going to talk about what they are, how to spot them, how to draw them, how they are used, what they are on the higher time frame, and then we'll briefly discuss how they relate to the Seek and Destroy daily profile. Let's hop into the PDF. So what is a broadening formation? A broadening formation is a pattern in which price is constantly expanding. You can see here, we are in a range, and then we are expanding that range up and down. And by the end of it, we have a larger range than we started with. Let's talk about how to spot a broadening formation. You can see we have some sort of range or consolidation right here. And then as we move forward, price takes out one side of the range and then takes out the other side of the range. It continues to fail to break out and then trade back through the range once again. So if it's failing this side, where is it likely to go? Back through the range again. If it fails this side, it'll go through the range again. And then drawing out the pattern, you can see how it looks like that. So let's take a look at how to draw these, and then we'll hop into the charts for some examples. So there are two ways to really draw these. The first one being identify a high and a low, then look to the left and see the highs and lows they took out. So you can see we have a high here, I look to the left, we took out these highs here. I have a low here, I look to the left, and we took out these lows here. So drawing that out, you get your broadening formation. So the way I found most people succeed in drawing these correctly is drawing out buy side and sell side liquidity. When we take one side of the range, what you do is extend those lines out. So this low here took out sell side liquidity. I would connect those lines together and then extend it. This high here took out buy side liquidity, so I'd connect those two together and extend it. Now, when we trade back through the range, this low took out sell side liquidity, so then I would extend this line to connect with that low. Now if we're going to trade back through the range, this high took out buy side liquidity, so now I would extend this line to connect with this high, and I just continue this process over and over, and that's how I would get a broadening formation that is constantly expanding. Let's hop into TradingView to go over a few examples of these and spotting them, and then we'll talk about how they can be used, and then we'll come back to the PDF to go over a few more things. So here we are in TradingView, and I just want you to take a moment to see if you can spot the broadening formation. So if you notice, if we're just drawing from right to left, you can see how this high takes out all these highs to the left. And this low, we go draw left, hadn't taken out that low yet, so it takes out all these lows to the left. So that is our broadening formation there. Now there's also broadening formations within broadening formations. So you can see before these highs were created, what did we have? This high here took out all these to the left. These highs here took out all these to the left here. So you're going to see there's going to be broadening formations within broadening formations. And if you even look lower, you can see this low here took out all these lows to the left. So we have a broadening formation here as well as here. Let's clean up the chart here, go back on replay, and talk about how you could spot this real time. So here you can see on the hourly chart, we have a high and a low. So this is the current range we're trading in, and you can see this is within a higher time frame range as well. But let's let this continue and see what happens. Now in consolidations, I'm only interested at the external part of the range. Now that we took this low, can extend this out, and that's one side of my broadening formation. And here we make a new low, extending this even more. And you can see on the lower time frame here, don't want to confuse people, but this high here took out all these highs to the left, and we had a smaller time frame broadening formation there as well. So playing this forward a little bit more, you can see we once again expand the lower side of this range, and we cannot displace, right? We cannot break out of this range. We have now created equal highs on this side. So ICT wise, we swept sell side liquidity and we have equal highs resting above. Where are we likely to go? Broadening formation wise, we took out this side of the range. Where are we likely to go? Both of those point to higher. And there we create perfectly equal highs. So we'd anticipate price to do what? Purge those highs. And you can see we get just a little move over this. So that is still a broadening formation. News comes out. We take this high, and you can see how this is starting to form. Now, when we take this high, what do? We can't break out to the upside, so we go see the other side of the range. Now, drawing this out, extending it down, we have our broadening formation. So if we can't break out of this side of the range, where are we likely to go? Back to the other side. And one thing I do like to pair this with is SMT on the edges of the range, right? Because ideally what I'm using a broadening formation for is either points of interest, right? Because in a consolidation, I want to be looking at the edges of the range for opportunities. So at a point of interest, looking for SMT, right? And the other thing I look for is using it as targets. If I'm looking for price to trade from this side of the range to the other side of the range, I can look to target buy side liquidity here, or for price to align with time and hit this broadening formation. So let's see. And there we go. You can see how both of those could be used as targets. So now extending this out, if we're going to break out, that's great. We'd want to see this used as support to then go higher. But if we're going to fail this side of the range, where are we likely to go? The other side of the range. You can see, not really breaking out. We're coming back into the range. So then my eyes go where? Down here. Letting this play out. There we go. We go make a new low and touch the broadening formation once again. So hopefully you can see how we start with a consolidation range, and as we fail to break out, we go see the other side of the range. So I showed you how I like to pair it with SMT on the edges of the range and use it as targets. What else do I like to combine it with? And I like to combine it with the power of 3. And let me explain that. So here we have a power of 3 diagram. You can see we have accumulation, manipulation, and then we get distribution, right? So think about this in terms of a broadening formation. We have a consolidation range, right? We take out one side of the range. If we fail to break out of the range, where are we likely to go? The other side, right? Forming a broadening formation. But I also like to pair it with the power of 3. And what else I'll use is the box setup, right? Because if I take this initial range here, I'll use this as a point of interest, but that is something that you can study. So applying this to this chart here, what do we see? Well, prior to news, we have accumulation, or this consolidation range. We have manipulation. And if you notice, what does the manipulation do? It takes out all the consolidation, but it also sweeps this high here. Then where do we go? We go lower with our distribution. Now, if you notice, once again with targets, I could have been targeting sell side liquidity here, or using the broadening formation, I could have gotten a target right here. Another thing that I like to do is use discount and premium. So what I'll do is either use this initial range as discount and premium and mark that out, or what I'll do is as this expands, I'll update my discount and premium. If I do not anticipate price reaching all the way to the other side of the range because of higher time frame order flow, I can look for price to trade back to equilibrium or equilibrium of this initial range. And then the last thing I'll do is actually just mark out this initial range, high and low. And I can use the bodies or the wicks on this, and I'll use this as kind of a point of interest for price to trade back into. Now, understanding what this looks like on the higher time frame is important. So let's go back to the PDF and then we'll come back into here. So back here in the PDF, you can see we have a broadening formation in the background. And if you look at the range of these candles here, you can see on the higher time frame, we'd have a high and a low here, or this range. A broadening formation on a higher time frame will be an outside bar, since it took both the range high and the range low. Let's go back to the chart and look at the daily. So out here on the daily time frame now, what do we notice? Well, we have previous day high and low, which was taken on both, right? So if both sides of the range was taken, what is that? Well, that's a broadening formation. I can extend that out. What do we see on the next day? We get a broadening formation as well, or another outside bar. You can see how extending these out, it can be used as targets or points of interest for a reversal. So going back down to the hourly time frame, since I am anchoring those off of previous day high and a low, they'll be a little bit different than the range I chose here, but you can see how you can see that from the higher time frame as well. And the last thing I want to talk about is a broadening formation within the daily profile. Now, if you want a full dedicated video on this with my daily profile series that's going to be coming out, please let me know in the comments section below. Or if this video is enough, please let me know as well, and I won't make that video. But what I like to do is use these sessions. So what I'll look for is if London session took Asia high and low, then I'm anticipating New York to look for London high and low as points of interest and or a broadening formation. So let's go look at a few examples of this. So dropping down to the 15-minute chart here, what I like to do is use an indicator called underscore boxes. And if we take a look at that, I do adjust the settings. They're not the same as these sessions, but what I do is I do that so it just connects it and makes it look a lot cleaner for myself. So taking a look at this day, zoom in here, what do we notice? We notice that London took Asia high and low and couldn't displace out of either of them, right? So then what can I anticipate? I want to use London's high and low as points of interest, right? Now combining that with a broadening formation, you can see how that works out there. And that is most of the daily range there, right? And that would get expanded and you get these points of interest for a reversal back into the range. The next day, what do we notice? Asia high and low, once taken again, can't displace. Extending this out, you can see that frames the reversal here, right here. This does get expanded out and expanded out. But you can see here how New York AM session makes this range or expands it and then consolidates the rest of the day. The next day, what do we notice? While we're waiting for news, Asia high and low taken by London, smaller broadening formation here. This is what forms the higher time frame broadening formation, and then the accumulation, manipulation, distribution for the news to take out this side of the range. And here, equal highs up here, it takes out this side of the range, right? When we take out this side of the range, what can we anticipate? A move to the other side of the range, and then we get this broadening formation here. Using this high looking left, and just clean this up a little bit, right? And there we have another broadening formation. So it's definitely a way to look at price action. I mostly anticipate this daily profile when there is a lack of news events on the economic calendar, or if we're waiting for a news event the next day. So for example, if we look at this week's price action on NQ and yesterday, what do we have? Well, I'm sure you can see it now. We have this little broadening formation, right? We just touched this broadening formation here. And here is one more example. We sweep these lows into this gap here, or take out this side of the range. Where do we go? Well, we go see the other side of the range here. I hope you found this video helpful. If you did, please consider liking and subscribing. And if you want access to this PDF, it will be located in my free Discord. I hope you guys have a good one. See you next time.